Hi, I'm Ron Lefferts. I'm the Global Head of Technology Consulting for Protiviti. I'm here today with my colleague.
Yes, my name is Tyrone Canaday. I'm the Global Head of Innovation at Protiviti.
Hi, and we'd like to welcome you live from the floor of the New York Stock Exchange, where we're here on behalf of the Museum of American Finance and the C-Suite video series on Disrupting Wall Street, the Power of FinTech. The innovation's always been there. Often, in the past, firms would look at FinTech, for example, the existing firms would look at FinTech and would say, and this is interesting, and then they would turn to the traditional providers and say, okay, this is what these guys are doing, how can you do it for me?
When you look at different institutions, there's really this race to an app that can provide all the different products at your fingertips. Now that really, it's at the point of transaction. People are operating on their mobile phone in a 24/7 on-the-go model. You know, you want access to your banking app and seamlessly transform over to your wealth account and have access to your card payments, things like that, and mortgages as well. So really consolidating all that information and then driving that behavior, looking at all the behaviors of how you interact with these different apps and collecting the data. I think that's where you're really starting to see the trend, and it's really focusing on that customer experience. The customer experiences that they're able to provide, the API integration, the capabilities, the speed, and the cost, being able to do things where you're able to set up a bank account in a couple of minutes. Those are features that create a lot of stickiness with the borrowers.
Now with the proliferation of fintechs and cloud and other enabling technologies, very rapidly can firms deploy the same type and level of client experience that any of the major players have. And so that really provides a lot of choice across a whole range of offerings.
I think that speed to market is so important now, and we're seeing that at a lot of the financial institutions, and they're changing the ways that they operate, or moving to these more modern architectures, trying to address the problems around legacy technology and legacy debt that's built up over decades, right? Getting off that as quickly as possible and moving to modern architectures and even more, I would say, modern ways of working, where you have agile development, where you can start to deploy code on the multiple times a day, as opposed to waiting for quarters and months to do that.
One of the areas is in regtech, which is a rapidly growing segment of the fintech world, where applying enabling technologies, leveraging secure workflows, machine learning, robotic process automation on things that had been done manually and repetitively are now being replaced with technology. And so rather than do things over and over again with multiple people and leave room for error, getting the right controls in place and having those things taken care of by enabling technologies is a great area of investment for firms as they're looking to provide that consistency and quality and reduce their costs.
To operate in this new paradigm where you've got technologies like AI, you're moving at a lot more of a rapid pace. You need regtech to counterbalance a lot of those aspects on the control and risk side.
Fintechs, by the definition, are often new, smaller, more nimble, and yet they're lesser known as well, too. Now, they may have individuals who are part of the team who have great experience, but the fact is their products are new.
As you start to work with companies, that cultures are totally different, right? They work in a more agile way. You may be working in a waterfall, but you've got this kind of bimodal aspect where you're integrating and you're working together, but there's two different cultures. And so that resistance to change internally of how to get to more modern ways of working, I think that's going to be another risk. And underneath all that, just the more complex cyber risk profile. No, not only are you just configuring and looking at configuration risk within your environment, but you're also looking at the firewalls and the API connections, but also the third-party nature of the cyber risk, which just gets more complex with that profile.
The day that the new technology is deployed live in production, it becomes legacy. And so one of the other risks and challenges is as you deploy this new technology, without a broader set of frameworks about how that's going to be managed, how redundancy is going to be built into, and that new dependency that has just been created on that technology, on that company, that you may not have some familiarity with. Those are also considerations that need to be managed as well. those two categories, run the bank and change the bank, which are often used, are need to be kept in balance. And so I do feel that the rise of FinTech has pointed to the fact and the frustration of many institutions of having to spend too much money on running the bank and keeping up with things such as regulatory change, and finding ways with new and open technologies who are fit for purpose and who are fit for dealing with these changes more rapidly to drive the cost down. That's where you're seeing a lot of growth and a lot of interest from these institutions.
Yep, and I agree with that. And I think also the role in regulation as they start to make regulation for new emerging technologies. You're starting to see a lot more thematic things out in the industry where you've got technologies like AI coming in, where now you can have artificial intelligence start to do things like credit decisioning. Mm-hmm. And so you're having these more of these thematic topics around ethical AI and how do you have diversity of thought on how you create some of these algorithms. And I think those are aspects where they're not answered yet, but those are questions that both the regulators and the banks have to look at, and how do you start to solve that together.
We're at a point where we're just trying to figure out what are the right applications and how can that support and better increase the customer experience or the security and timeliness and accuracy of the financial information that financial institutions are tasked with, with maintaining on behalf of their clients.
You have companies and people out there that are afraid that AI is going to take their jobs, but I think it's going to disrupt in certain ways, but I think there's going to be areas where it's going to create new jobs, where it's going to be more analytical in nature, where people can start to do more analysis work or investigative work, as opposed to doing some of the manual tasks that they've done day to day.
I'm not going to pretend to know where the next best great thing happens, but I do know that best-in-class firms are enabling themselves to rapidly assimilate and move to where that next great capability is through having great people who are technical and having open architectures that support the rapid integration of things that are developed within their own house or through partner and ecosystems.